Hey traders, are you ready to be surprised by the major moves the market's going to be doing in the month of September? September is the weakest month as far as market performance goes. And so, what should you be prepared for? We're going to cover that today. This is an abbreviated session of Trade Your Way to Freedom. Matter of fact, and I want to basically share a couple of stocks with you. I want to share just some surprise, because when I was checking the charts for the longer term, it's looking ugly out there, guys. And so we're going to jump into that Moscow spider representing the S&P. Came right down to the 8-day moving average and then bounced. Early in the day, it looked like we were going to close below the 8-day moving average, and that would have been a big negative, indicating that we'd probably sell off a little bit more. Realize we've got some support down here about the 555 level. But the thing that really caught my attention on the S&P and the NASDAQ is this. I've got a potential double top here. Double top, negative divergence on my momentum indicators, saying that, okay, I may have gone as far up as I'm going to go, and now it's time to turn back around. Could the September effect have an influence on that? We're going to find out here shortly. The other thing that I encourage you to do, since this is the last day of the month, is take a look over here at the monthly charts. So I've got a hanging man, double top, potentially. What about the monthly charts telling us? Oh my goodness gracious. One, a huge outside month after a long uptrend. Notice, okay, the good things about this monthly chart is that we're holding the 8-month moving average. However, what is that? That candlestick right there. That is a bearish hanging man. That's a reversal signal to the downside. And so I'll be watching this week for the spiders or throughout the month. If they pull back into the 8-month moving average, that may be a good time to jump on board. We'll have to find out about that. What about the NASDAQ represented by the Qs? Daily chart looks pretty good, breaking a flag to the upside, almost. Closed back above the 8-day moving average. That's very positive. So that looks pretty good. However, notice that it has been basically weak, and we're still trading off of this lower low. Correction, a lower high. Lower high. We're still trading off of that, and we'll see what transpires from there. Are we going to climb back up and then fall? We'll see. On the monthly chart, also, let me get rid of the Fibonacci's there really quickly. I'll put those back in later. On the monthly chart, check this out. A huge hanging man after a spinning top doji here. And so we've got our boundaries for the month pretty well defined. 486 down to 422. I would look at putting an alert around where the 8-month moving average is going to be later in the month, about the 448 level. Next up, the Russell. The Russell had been actually taking off like a bandit and doing fairly well. IWM, silly. There we go. So similar type situation, hanging man type candlestick on the monthly chart. The daily chart is bouncing off the 8, maintaining it, but the Russell or the IWM is suffering a lot the same thing that a lot of the stocks that we watch out there are showing. Yes, they're in a bullish move to the upside. However, the volume is absolutely, pathetic. It basically is terrible. And so when the volume is really low like this, we can recognize that, yeah, we may continue to push up, but this is a really big questionable uptrend, and it could end very, very quickly with a sell-off back below the 8-day moving average. So how am I going to trade this? I'm currently in a position on TNA, which is the 3-time leveraged ETF of the IWM. And so I'm going to hold that. On the flip side of that, if in fact at the highs, I'm going to be looking at doing a little bit of hedging, and I would look to buy SQQQ. That's the leveraged inverse ETF of the Qs of the NASDAQ. We'll see if we can get that breaking up a little bit higher here, but it's showing just the reverse signals to what we see on the bullish index. And so it's showing a inverted hammer at the end of a downtrend, which is a bullish reversal signal. If we can jump on board this and it breaks above the 50-day moving average, then look for a ride to be at 27 to, let's say, 38%. And with these leveraged inverse ETFs, I like to get in and out of those very quickly if I'm going to be trading them at all. But give you a little bit of coverage for the for that. Let's go ahead and jump over, and I want to share something with you, and then we'll come back and do the individual stocks that I'm looking at. And what I wanted to share with you is this. This is one of the things. And this is the work that, as I said, Corey Mitchell had done earlier. And he shows us where the weakest and the strongest months are. And I want to focus primarily on the NASDAQ, which is down here. And let me blow that up to make sure you can see the darn thing. There you go. And as you see, the weakest months for the NASDAQ are February, June, and September, with September being the weakest month. The worst performing months over the last 20 years, this is 20 years worth of data, is February, June, and September, as you would think. What's interesting and bear in mind is that the September weakness, which is oftentimes a sell-off, leads to the end of year rally. Typically, that starts first, second week of October, a lot of times. And so if that's the case, we can look at that bouncing to the upside, but we want to be paying attention, especially the last half of September, for look for the stronger stocks, and also look for those reversal signals on our leverage ETFs that we follow. So that's what, that's a 20-year average. And here's a chart of the 20 years. Okay, this is a seasonality chart of the NASDAQ going back to 2000. And so it's 24 years worth. Note a couple of things. Here's where we're at today. Here. Now, this is a historical chart, and the chart of the NASDAQ on a year-over-year basis may or may not look like this. But there's a couple of things we can take away from this that I want to highlight to you. Is that the historical pattern is from September through about the midsection of October is for a pullback or a sell-off. We don't know how deep the sell-off is going to be, but a pullback. Note that typically the second to third week in September, there's a little bit of a tick up. That could be people the institutions coming back from their Labor Day weekend, and you'll get a little bit of a tick up, and then the sell-off continues. And then midsection of October, during the first, it's about the second week in October, we start to run into a rally that lasts all the way until first part of December, then a pullback in the Christmas rally here at the end. And so if you've never looked at this chart, we are here. So I would anticipate some headwinds moving into September, and we may find that we want to one, tighten up our stops. If you are a trader who trades and takes your profits at certain percentage point, like 10, 15, 20%, you may want to take your profits at 7.5% and 12.5 or 15%, simply because this section of September can get very, very volatile, very, very volatile. So we want to be keeping our eye on that. And leave a comment. Let me know if you've ever worked with these seasonality charts. They're really, I think they give you a lot of information, not so much to time trades, but to give you a sense of what what could be potential headwinds that you would be facing. And it also gives some good ideas about, okay, well, this is where we have the runs. And that was bore out by the table that Corey put together that I showed you just a couple of seconds ago. Okay, let's hit some of the stocks that I'm looking at that you could potentially want to be taking a look at. One, of course, is Tesla. Tesla is really, really searching for a potential break to the upside. Very positive move on it today. The challenge with Tesla and a lot of the other entities is this: lack of volume leading to lack of traction. Now, even though I have a close above the 8-day moving average, note I am still below the downtrend line. We break above that and get a little bit of extra volume popping in here, then we could, in fact, continue to move on up back into this resistance zone up here. Let's call that resistance zone. Starts at about 238 and then runs all the way to the top. And the middle of it is about the 250 level. So that would provide 250 as a pretty good target to the upside, or the downtrending trend line that we see over here on the monthly chart. Look what kind of candlestick you have on the monthly, a nice little hammer. However, that isn't a reversal hammer because you're not really reversing a downtrend. But it does, again, look at those monthly charts. That gives you the range of potential support resistance that's the strongest for the month that may come into play. Like I'll use that to look at the 8-month moving average, about the 204 level. That may be where Tesla would be a good buy. Next up is NVDA. Now, NVDA, they say, did a reversal today. I'm not sure. I'm not buying it. You get these headlines and you just got to run up the BS flag and just go, yeah, wait a second. Positives on NVDA. After a small pullback with earnings, we're getting a bullish harami. That's a positive bullish reversal signal. Again, looking at the monthly chart, I like the 8-month moving average. I can also look to what's it doing on the weekly. Note, it came right down to the weekly this week, right there at 118 and stopped dead in the water. So that may be its short-term support. The thing that is of concern, as I said earlier, is we have all these overbought conditions with momentum. That's looks to be like a formation of a head and shoulders on the RISI. And if that's the case, then we could break to the downside. But we've got a really good level of past support, about the 90, looks like about $96 or so. Yeah, about $97. So $97 or this uptrend line right there, that's where Tesla, NVIDIA would come into be of interest to us. One of the other things that I highlighted to everybody earlier was. And as we get a little bit closer, I am going to be talking about Bitcoin and a couple of the Bitcoin miner stocks that I'm keeping my eye on. They're not ready to buy. Don't take them out of the oven yet, but I just want to be aware of them. So the other one is ARM. I highlighted this on my earlier video. And like a lot of other stocks, we're right up against, check this out. This is just crazy. It's crazy, man. We're right up against the 50-day moving average. We break above the 50, then stand by, because that gives us a red light, a green light, excuse me, to run probably up to, there's 24%. And if we get back all the way to the past highs, we're talking about 34%. Throw the fibs on top of that, and we're looking at probably a 50% run, and that could happen before the end of the year. However, look for it to pull, anytime I pull back down into the 8-month moving average would be of interest to us also. So that's it for ARM. Okay, running over to Bitcoin. And I am going to leave the monthly up on Bitcoin. Check out what's happening. Okay, we've got a very well-defined level of resistance that's up at about, the high of the resistance is up at 74,415. The low of the resistance based off of this week, it bounced off the that line right there. That is at a low of 49,365. What kind of a percentage drop is that? That turns out to be about 33%. So fairly reasonable for a Bitcoin. Check it out. It's closed above the 8-week monthly, 8-month. However, it closed below the 8-week moving average, which is not a positive sign. So look for a potential pullback down into these areas down here. Checking out, testing the long wick on this candlestick right there, which was from the week of 8-5. With that, the way I'll look to trade this or to basically have it alert for me, I'll put an alert probably down at these bodies right here, about the 54, let's say 54,600 level. And if it hits that, then I'll go check my charts out to see if there's a trade in there. So some of the entities that I'm watching to go with that, of course, is BITX. BITX is this is the 2-time leverage ETF of the Bitcoin futures. It's a low price way of trading the Bitcoin. And so just check it out. Notice how everything is stacked and running to the downside. Bearish engulfing on the weekly chart. So I'm looking at probably coming back and retesting into this candlestick. The midsection is about the 2355 level, looks interesting. Next up, Mara. Now, Mara is a Bitcoin miner, and like a lot of everything else, it has not, the daily momentum has not shifted, but the weekly momentum looks like it's getting ready to shift. It has not shifted yet either. Earlier in the week, the TSI had crossed to the upside, but with the sell-off at the 8-week moving average this week, and we have a dark cloud cover, which means that we're probably going to fall a little bit more back into the, I would say it can fall all the way back to the low of 1371. If it reverses before that, that could be the first point of a new uptrend, a higher low. The other Bitcoin miner I like is CLSK. And the chart looks a lot the same. I'll look for that too. And what I like about these particular Bitcoin miners or Bitcoin is that they basically get into a trading range. And if you're quick and you can define what the range is, this range, like this range here, that was a 40% range, and it would run that 40% about every other week. So if you're trying to compound an account, that works really, really well. And the last one I'll throw out there is Coinbase. Coinbase also kind of reversing down, closing back below the 200-day moving average. Not a positive, but we'll see if we hold this big green candle here where it came off its bottom after earnings. If that holds, the midsection of that holds, that could also lead us to a higher low and a bounce up to the upside. Okay, folks, if you have found the value in what we presented today, and especially the stocks, and a little bit look at that aspect of seasonality that maybe you've never seen before, leave a comment. Let us know what you think about it. Let me know what you think about the new format that I'm going to be utilizing going forward. And last but not least, if you've gotten benefit from this, hit that subscribe button and the bell so you'll be notified the next time we post. And I'll be posting more regularly around the 1 o'clock Hawaii time or 7 o'clock East Coast time, somewhere between 6 and 7 East Coast time, going in the future about 2 to 3 times a week. So aloha and God bless everybody. Have a great Labor Day and enjoy Monday, the day off. And we'll see you.